All right, let's dive right in. Today, we're tackling the wild ride that is Rezolve AI's stock. It's been on a roller coaster lately, and there's a lot of confusion out there. So we're going to break down what's really going on.
So this is the big question, right? Why is a company like Rezolve, with some seemingly good things happening, seeing its stock fall off a cliff? It's a real puzzle. But, when you start to connect the dots and look at the data, the pieces, they actually start to fit together.
Just recently, the stock took another sharp 8% hit in a single day. Ouch. And a move like that, especially when there's no big scary press release from the company, can leave you scratching your head. So let's unpack the key forces that are putting all this pressure on the stock.
Okay, first thing we have to do is zoom out, because it turns out the biggest factor here, and this is kind of wild, has almost nothing to do with Rezolve itself. It's about this massive storm brewing across the entire tech market, and Rezolve is just caught in the downpour. I mean, look at this. This chart really tells the story. A whopping 80% of what's dragging Rezolve down isn't its own performance or anything it did wrong. Nope, it's just getting pulled under by this huge sell-off happening across the entire software world. Only about 20%, just a small slice of the pie, is actually company-specific.
So what's happening is really a kind of perfect storm. On one hand, you have what the pros call a multiple reset. In plain English, investors are getting super nervous about growth companies that aren't profitable yet, so they're valuing them a whole lot lower. And at the same time, there's just this wave of fear washing over the entire software sector, creating a real bear market.
And this slide, wow, this really puts it all in perspective. Rezolve is absolutely not alone in this. I mean, just look at these numbers. We're talking about the giants, Adobe, ServiceNow getting totally hammered, down over 50%. So while Rezolve's 69% drop definitely hurts, you can see it's right in line with this brutal market-wide trend.
So what's got everyone so spooked? Well, a huge part of it is this per-seat pricing model. The theory goes like this. As AI gets smarter, companies will need fewer employees, or fewer seats. And for all those software companies that charge based on the number of users, well, you can see how that could be a massive hit to their future revenue.
But here is the absolute kicker. Rezolve doesn't even use a per-seat model. In a market that's running on fear, though, nobody stops to check the details. The trading algorithms and big funds, they just sell everything that smells like a software stock. So Rezolve is getting unfairly lumped in and sold off in sympathy. It's a classic case of guilty by association.
Now, let's talk about that other 20% of the problem. This part of the story, you could say, is more of a self-inflicted wound, an action the company took at probably the worst possible time.
So here's what happened. Rezolve raised some money by issuing new shares, which diluted existing shareholders by about 20%. Now, in a healthy market, that might have been absorbed just fine. But in today's fearful environment, Wall Street's reaction was severe, turning that 20% dilution into a nearly 50% crash in the stock price.
The timing was just terrible. The stock was just starting to build some positive momentum, and this capital raise basically came in and shot that momentum right in the foot. It just goes to show you how incredibly sensitive the market is right now to any perceived weakness.
Okay, so that's the why behind the drop. But what's actually happening in the market right now? This is where it gets really interesting, because when you follow the money, the trading data is telling two completely opposite stories. It is a real battleground. First, let's peek at the options market. That's where traders bet on a stock's future direction. And the sentiment here is leaning slightly bearish, with about 54% of the bets predicting the price will continue to fall.
And it's not just the options traders, the short sellers, those are the folks who bet on a stock's price going down, are getting more active. After pulling back from some earlier highs, they're now increasing their bets against Rezolve again, trying to capitalize on all this negative sentiment. It's a very tactical move.
But here's the twist. While all these short-term traders are betting against the stock, one of the biggest long-term investors in the world is doing the exact opposite. Get this, the institutional giant Vanguard just increased its ownership stake by a massive 43%.
And this creates such a fascinating conflict. You've got the smart money, large, patient institutions like Vanguard that are accumulating shares, likely seeing long-term value past the current panic. And at the exact same time, you have the short-term market, driven by options traders and short sellers pushing the price down. It's a real tug-of-war.
So where does all this leave us? With these conflicting signals, the big question is, where could the stock finally find some stability and start to recover? Let's look at what the technical charts might be suggesting. Analysts are watching a few key price levels very closely. The stock recently broke through support at 275, The next potential floor could be around 225. But if that doesn't hold, the price to watch is 195, which is seen as a very, very strong historical support level.
This leads to a powerful argument that the entire software sell-off is just a fear-driven overreaction. Think about it. Major companies like Adobe and Salesforce are still beating their earnings expectations and raising their future guidance, even as their stocks are getting crushed. And that leaves us with the final, crucial question. Is what we're seeing with Rezolve simply collateral damage in a temporary, fear-driven market tantrum, or is it an early warning sign of a more fundamental, long-term shift away from growth stocks? That right there is the multi-billion-dollar question investors are grappling with right now.